up until this point, Bitcoin volatility has been very non-existent. Bitcoin has been very, very solid right around the 30,000 mark. So unfortunately, we dipped a little bit below. We've been talking about how Bitcoin has been in this range and it's ready to make a move. This FOMC meeting can be that catalyst, right? Depending on what Powell says, maybe he's going to change his hawkish language finally to more dovish. It could be a catalyst. But in the meantime, because of this, we have the sell-off, right? What exactly happened? Well, we do know because of this, there were definitely some big whales that sold off that led to liquidations. So over the last 24 hours, we had 150 million longs liquidated. 150 million longs liquidated. Okay, so partly the reason whenever you have a lot of squeezes, either long side or short side, short squeeze, long squeeze, in this case long squeeze, when you have too many people that are too leveraged up, this happens. But as for Bitcoin, we know Bitcoin is still kind of just like hovering, but we're down. We're not at 30,000. We're a little bit down, about 800 points down, right? So people are wondering what is going on. Are we going to get that next leg up? Are we going to break 31,000 finally and continue higher? Well, today we have one analyst that thinks yes, and more good is coming to Bitcoin. And how high? $180,000. $180,000 by this date, April 2024. When I first came across this, I thought he was going to say like end of the next cycle, which would be like December 2025 or something like that. No, he's saying $180,000 by April 2024, which is the halving event, right? Well, actually halving event could be April or May, but somewhere around there. So leading up to the halving event, we're going to get $180,000. And why does he think this is going to happen? And this is actually from Fundstrat, by the way, Fundstrat. The reason being is this BlackRock spot ETF, if approved, will bring in massive amount of money into the space that will help drive Bitcoin up. It's really that simple. Now, according to them, right now, there's a daily demand of 25 million per day, okay? And there's a daily mining reward of 25 million. So it kind of cancels out. You have 25 million coming into the space every day, although I don't think that's the case. Miners are just holding that. But anyways, for this example, he's saying, well, 25 million is coming out, 25 million is coming in. It's net zero, right? But a Bitcoin spot ETF from BlackRock can add an extra 100 million more transactions or more buys per day. So the two are now not netting out. Now you have 125 million being bought per day, removing that, and then 25 million coming into this space. So then you have a net negative of $100 million. And that would make Bitcoin's price blow up. Every $1 would add to $5 in price appreciation, basically. And that is why if we see a spot Bitcoin ETF, we could see demand just skyrocket to the moon. And you know what? Right now, we still see this Wyckoff accumulation. So short term, we may still see some of this, okay? And Wyckoff accumulation is basically the big boys trying to accumulate. Maybe BlackRock is doing this. Not saying BlackRock's spot Bitcoin ETF is only good. You know, having BlackRock in anything is not 100% good. But you know, these big boys, they're the ones that created this and follow this, right? So who knows? Who knows? Maybe this is one of those periods where they are simply accumulating, and it's not just the BlackRocks of the world, right? There's others. There are huge fund managers that need to accumulate Bitcoin in order to come out with their spot Bitcoin ETF. Here's the thing. They need to hold. This is the difference between futures and spot ETF. They need to actually hold X number of Bitcoin. So they may be accumulating right now. They're trying to accumulate as much as possible. If we are following this Wyckoff accumulation pattern, well, that means the next leg up are going to be fantastic.
Obviously, you upgraded the language around growth in the statement today. You know, we've seen the Barbie movie numbers. We've seen everyone going to Taylor Swift concerts this summer. It seems like the American consumer is in pretty good shape.
No one's seen
and
those
it does seem like growth is sort of picking back up a little bit, or at least doing well. And I wonder from your perspective, if that continues, if we see growth not just stabilizing, but doing, you know, performing well this summer, is that a problem because it's inflationary, or is it good news because it suggests that a soft landing is more likely? Just how are you thinking about that sort of trajectory?
Horrible question. The most ridiculous thing that was said or asked early on by our favorite Gina brought up two economic indicators: sales of Barbie and Barbie movie, I should say, and sales of Taylor Swift concert tickets. She used those two examples as major economic indicators or activity that we should pay attention to, because, yeah, that's a good forecast of how well the economy is doing, or how high or elevated inflation is. Or I don't know. She brought it up like everyone is looking at those numbers. I don't think anyone is looking at those numbers. I don't think anyone went into this meeting studying how well the Barbie movie has done so far and how many tickets Taylor Swift sold. So I don't know where she pulled that out of. Remember that the Fed is in charge of price stability, according to Fed Chair Powell, right? But what he's not in charge of is the diminishing buying power of your dollar, basically, of your money. He is, but, you know, that's not something that he could really control or care about at this point, because, you know, the Fed, they keep printing more money. And it's not just the Fed. Central banks around the world, they keep printing more money. They want inflation, right? Powell said he wants to have 2% inflation every year, and it compounds over time. And what happens with your purchasing power? It goes down. And that's not really something that he cares about. Okay, he cares about very elevated levels of inflation, yes. And he cares about bailing the banks, yes. But he will turn on that money printer whenever it suits him, right? And that is why the buying power of the dollar keeps going down, okay? And that top graphic only goes to 2020. It got a lot worse since 2020. The last 3 years, we printed 40% of the circulating supply of all money in existence. So think about that. So that dollar actually went down to probably like 50 or 60 cents. Okay, so it's been getting really bad, right? While Bitcoin has been going upwards and upwards and upwards, right? Well, that last bit going up to $1 million hasn't happened yet. But you'll see, it'll get there someday, because more and more people are looking for a store of value and a hedge against inflation. And more people are getting out of the dollar, or getting out of the euro, or getting out of the yen, or whatever else may be, right? So that's why you need to invest in assets that appreciate, that can outpace inflation. That's how you truly win. Tim Draper also believes in that. That's why he went on Fox News and said, we're going through one of the most exciting decades I think we will ever see in our lifetime, because we have Bitcoin transforming the way currency and commerce is done. Now, Tim Draper has been very bullish on Bitcoin for a very, very, very long time. In fact, he bought 30,000 Bitcoin from the Justice Department years ago when it was only $300 each. So, you know, he's done well for himself with Bitcoin and so many other tech companies out there, right? But he still thinks that Bitcoin will reach $250,000 by the end of this cycle. Again, that's not too far off. We're talking about the end of 2025, right? But as we get closer to the halving event, and after that, you know, there are some explosive things that are going to happen. The country that I am referring to is Japan. And yesterday it was reported that Bank of Japan, after being dovish for many years, decided they need to kind of tighten their wallets and not spend as much. So unlike the Fed or the ECB, how Bank of Japan manipulates their inflation or their economic activity is basically through their 10-year bond. Rather than mess with like a Fed fund rate or a fund rate in general, they keep on buying their 10-year bond. Yesterday it was announced that today they were going to tweak it, and they did. So rather than keep it at between 0 and 0.5%, they're going to keep it between 0.5 and 1%. So they softened that stand a little bit. So with all this said, what does that have to do with Bitcoin, right? Obviously, Bitcoin has been stagnant for a while now. We have not been able to break 30,000, and I do think it's just a matter of time. I think there are a lot of people paying attention to all the stuff that I've been saying on a macro scale, right? Afraid to put their money in, but that may change. We know with Bitcoin, it always does. It always finds a way to break out, move forward and onwards. And you know what? That may happen even today.